Time for Under 30, and we're discussing, today we're discussing Instacart, and over the break you guys reminded me, and it took me a second, I'm not even under 30 anymore, so it's kind of depressing now that I'm thinking about it.
Thank goodness, for once I am still under 30, even though everyone apparently doesn't believe that. That has nothing to do with Instacart though, just the price is obviously under 30 here, but Instacart has been disappointing since its IPO. It's down about 16% now month to date. It's just consistently sort of sold off a little bit here, but here to tell us now more on what the street really thinks about this name, I'd like to welcome in George Tsilis, senior markets correspondent. George, you can pass for under 30 as well, but walk us through what you're seeing in Instacart.
You're flattering me there, Jenny. I'm way over 30. I mean, look, Instacart had IPO'd back on the 19th of September. I think a lot of folks, including myself, are familiar with this business, either from a consumer standpoint or effectively because of a marketing standpoint. But it's a very interesting business. I think food delivery is another step in terms of how we shop from the standpoint of e-commerce and groceries. It's very convenient. I think it's going to be growing. And if you actually look at the estimates for the entire industry space, the estimates in the next 5 years that total 20% of total grocery shopping will be done through e-commerce, and of course Instacart will capitalize on that. And I think if you look at the market of this industry space, it's really starting to develop into three major players, Doordash being one. We actually look at Instacart as another one, and Uber, by the way, is actually making a lot of headways into the grocery delivery space as well. So because it's a new IPO, we still have to sort of let things sort out from the standpoint of earnings and sales. But if you look at the analysts now, for instance, there's a whole slew of analysts today that are starting to provide coverage on the name. On the high side, you have companies like Goldman Sachs. They've got a $48 price target. Bank of America is neutral at $30. If you actually look at Citi, they've got a $34 price target on this name, which, if you look at it from the standpoint of a business, it's been around for quite some time. They are profitable, and that's important here because we've seen a lot of these, SPAC reverse merger names, especially going back to 2020 and 2021, that are in terminal declines because they haven't demonstrated any profitability. Instacart is profitable. They did generate on about $2.9 billion in sales last year, or for the trailing 4 quarters, about $180 million in net income. So I mean, this is an interesting name in a space that's growing, and right now they're growing profitably with about $2 billion on the balance sheet relative to $7 billion market cap.
George, as we kind of look ahead in this space, you have Uber on one side that seemingly has, I guess, attempted to build out all of these different services within its ecosystem. And then you have the DoorDashes of the world, the Lyfts of the world, the Instacarts of the world that are really focused on one aspect of it. Down the line, is there some sort of strategic partnership or merger between these names that are sort of operating in comparable services, but in different parts within it? So you take DoorDash, for example, that's primarily delivering restaurant food, and you have Instacart that's going into stores and shopping. Is there a partnership that can be there between a company like those two or Lyft to help being better positioned to take on a company like Uber that's doing all of these things?
Yeah, I think it's a good question. I think the dynamic of this whole space is quite interesting. They all have respective niches in their markets, if you will. I think Instacart is a pure player because if you look at their business, it's really technology. So they're not capital intensive. I don't suggest they have problems, at the very least right now, that Uber faces because of, for instance, cabbies are the taxi industry's protest against them, or, if you will, dealing with some labor disputes. So I think it's a pure play in the grocery delivery space, but I think there's also competition we have to be aware of, because if you look at Walmart, even Target, they're developing their own delivery services. I'm not sure about Kroger, but I could see a potential for partnerships of Instacart with major grocery outlets like Kroger, but that would be, again, something they'd have to consider because they would isolate themselves away from other retailers at grocery outlets, smaller ones that are going to be using their services. So right now it's a pure play company in the space, but I think partnerships are probably going to be in the cards for this company.
Yeah, and it's always amazing to me the different like fees and things that Instacart can charge. I do know from doing this that they charge like an alcohol fee. They charge like all these strange fees. It ends up being very, very expensive. It's great if you don't have a car, but then it's like it serves a very, very niche consumer, and I am that consumer, so I guess I understand it. But it's not cheap, George. That's one thing I will say. But we will leave it there. Really great breakdown on Instacart, of course, still relatively new to the publicly traded sphere.